Hello, everybody. In a constant endeavor to improve on myself to give you the best, I have tried this. It's an effort from my side to place this weekend's review over a video. Brickbats and bouquet both are welcome. In the last 5 days, Monday opened higher and Tuesday had a strong down day. Thereafter, a volatile day was witnessed on Wednesday. Same was the case with Thursday. On Friday, Nifty had a strong rally and finally closed the week at 10,901. In my previous weekend review, I had this view. The market remained sideways for a major part of the week. It should be regarded as continuation of the trend. So continuation of the trend was okay. However, let's see where I went wrong or where I was right. Correction, if any, is likely to be sharp and short. We had a sharp correction on Tuesday. On higher side, keep an eye on 10,853 and 10,912. Well, this 10,912 is quite an important level. This we should be keeping a close eye on even this week too. In the second part of the conclusion, I had written short-term weakness may crop up if we get a close below 10,750, and if we move below 10,637, I believe we did, major swing change could occur. Well, no major swing change did come up. We did close a day below this 10,637, but however, again moved upward. Consolidation may prove to be healthy for the market. Fine. As of now, the trend is up and it's healthy. Coming to this week's trend analysis, the primary trend, obviously with a very late signal, is still down. The intermediate term trend is on the higher side, is moving up. However, the previous time the reversal point was at around 10,288. That has moved to 10,607. So as of now, the charts indicate till 10,607 is violated, the intermediate trend continues to remain up. The beauty of this intermediate trend is for positional traders. Once somebody has recognized that the intermediate trend is up, like the place where you could have felt that yes, the intermediate trend has turned for the upside. Thereafter, it went continuously up. Initially, the stop loss was somewhere here, which was around 8,823. Thereafter, we are in an upswing. As far as support resistance goes, we will be marking out support resistance on the basis of swing highs, swing lows, and unfilled gaps, if any, on the left side of the chart. Gaps are there at around the 11,500 mark to 11,380. Gaps also lie at 11,035 to 11,244. Based on swing high and swing low, this particular zone is quite important in nature, which is at around 10,637. As discussed earlier, the intermediate trend remains up, and this support of 10,553 should also be kept in mind. Based on the moving averages on daily price charts, what we see is the 200-day moving average has just been tested by the Nifty. In fact, it is the second attempt here. The 13-day moving average is quite close to this particular trend. 30 is quite way off, perhaps well at around 10,403. So right now the 200-day and the 13-day will be quite important. If I go to the weekly charts and check the moving averages, the 100 week is at 11,029 and the 50 week is at around 10,900 where the Nifty has closed. But much more important to me is the hum of the 30-week SMA, the hum of the 30-week SMA and the 50-week SMA all are clustered at around this particular level. If you want to know more about the hump and plateau, please have a look at my moving average video. On the daily charts, the RSI is placed at around the 67 level. Now let us have a detailed look at this particular indicator. If we draw a trend line, which I was showing you for the last 1 month on Twitter, the trend line has been violated this week. At the same time, the projection of the trend line has also been almost met. Now what to do? Well, we have to see whether the indicator is resisted at the trend line or not. The second thing which would be quite interesting is whether the indicator falters below the previous swing low or not in coming days. Yes, divergences are here beyond doubt, but the intermediate trend is quite strongly up. The ADX line as of now is at 30. Any move on the upside will add momentum to it. At the same time, if ADX starts faltering from here, we may enter into a trading market. This is Nifty's hourly chart. The black line is the ADX on a 60-minute time frame. ADX 14 on a 60-minute time frame. Well, as of now, we had distinct peaks above the 25 line, which showed that any dips should be bought. As of now, the indicator is still to cross the 25 line. In case if it does, the trend remains healthy and nothing to worry of. However, if it falters before the 25 line comes down, then a new story will develop, which we'll be discussing it as and when it happens. This is RSI plotted on a 60-minute chart of Nifty. As you can see, the indicator has crossed above a downward sloping trend line. The projection of this particular trend line is a lofty high level of somewhere around 80 to 85 levels. It can be that the indicator may come down and then move up, or may even move up straight. But mind it, RSI has got some peculiar characteristics. If the indicator is moving up from extremely low level, the rise will be sharp and gradually slow down as it moves above 60, 65 or 70 levels. Likewise, if the indicator is moving down from extremely high value, the fall will be sharp and the speed of the fall will decrease as it moves below 30, 35. Now, coming back to the chart, I had told that the indicator projection is around 82. Beyond the 60-65 zone, which I just showed you in the slide, the movement of the indicator takes lot of effort to move up. So if you get a projection in which your indicator is indicating it might move to 82, I'm coming to the most important thing. The price has to blast upside for the indicator to reach 82. The put call ratio as of now is at 1.76 values, which is quite lofty. It doesn't mean that the market will correct itself from here. It might be so that we can continue with the upside for 1 or 2 more days. But if you draw the graph of this particular put call ratio, this is what we are getting. It's showing buoyancy. That's quite healthy. Now coming to open interest interpretation, as we see, since 19th of June, the open interest in Nifty is gradually increasing, and so is the price. So open interest increase, price is also increasing. We should take it as a healthy thing. But somewhere down the line, I had felt that the open interest was quite high in nature, build-up was quite high in nature, and sudden fall may come where liquidation will take place. That exactly took place on 14th and 15th. In the last 2 days, open interest has again built up. Obviously, we can take it that long build-up has taken place. Well, coming to the conclusion part, in 1930, Keynes said, markets can stay irrational longer than you can stay solvent. The statement perfectly describes the mammoth rise in global market in midst of pandemic. The intermediate trend, short-term trend is strongly up, may continue to remain so. However, in the entire trend, as of now, only major resistance is the hump of the moving averages as shown to you on the weekly charts. If this is crossed and sustained in next 1 or 2 weeks, anything can happen. Let's see whether these zones are successfully navigated by the index or not. Well, that brings to an end to the weekend review. Hope you liked it. Rooms for improvement are always there. Your feedback matters a lot. Please do give so. Thank you.